Profile Network, and we've got Paul Jackson, the CEO from TUHF. Now, ladies and gents, if this is the first time that you are watching this, please, I'm going to ask you to engage with us. Can you let us know now? Are you currently are you a client of the Tenant Profile Network, or are you a client of TUHF? Or are you a landlord or a tenant? Post that on Facebook right now. Let us know if you're a tenant, if you're an investor, if you're already with TUHF, or if you're already with Michelle Dickens. And the most important thing I want to know from you guys, do you have any questions? Are you being affected by COVID-19? Are you a landlord in a position where you don't know what to do about payment holidays? Are you perhaps a consumer, someone that doesn't know if your credit profile is going to be affected? So please, this is your opportunity to reach out to us and to let us know if you have any problems and how can we support you. Just to share with all of you that we have a lot of free information for you. See, right from before lockdown, the week before or the week of lockdown, on that Tuesday, we started recording or having these live shows on Facebook where they're all recorded. And all the webinars that we've had till date, Michelle Dickens' Rent Recovery Pack, a whole variety of information, fake news versus real news. It's all on our website and it's free for every South African. You've just got to go to www.joinsappin.com/COVID-19 and you can access all that information. And this webinar or this Facebook Live will be recorded and it will be up half an hour after this webinar. Now, the title for today, ladies and gents, is Capital Markets in Light of the Pandemic and the Way Forward. So what I'd like to is get straight into this. And remember, please share this with all your colleagues, your friends. If you know of anyone that is a tenant or a landlord, let them know about this live discussion. And as we're going through it, please post on Facebook and my team will send me those live questions and you'll have an opportunity to get your question answered by myself, Michelle, or Paul. And I think what I'd like to do is jump straight into it now. And we are going to start with Paul and then we'll jump to Michelle. So Paul, can you please introduce yourself, the company? How long has TUHF been around for someone that's never heard of TUHF? How would you explain that business?
Hello, Andrew, and hello to all the viewers. We're going through a difficult time, and thanks very much for giving us the opportunity, because we're actually all in this together. TUHF was formed about 17 years ago, and the best way to describe us is we're a specialist financier of investment properties. Our speciality is inner cities of the big metros. We're currently present in 7 metros right across the country. And our second speciality is rental housing. We do have quite a lot of associated commercial housing. I mean, if you think about associated commercial property, if you think about a downtown building, it's often upstairs flats, downstairs retail. And we fund ordinary South Africans. Many who do extraordinary things. I've been blown away by the entrepreneurial capability of just ordinary people that you'll find walking in the streets in downtown area. We're a non-bank financial services company. So basically we borrow from the capital markets and we lend them to ordinary South Africans. Anywhere between R1 million and 30 million rand is more or less our comfort zone per investment. I think what distinguishes us is we really believe in inner cities. We think it's a strong investment case. We think those economies are multi-sector economies that are very important. Tenants derive their incomes from a wide range of, whether it's financial services, transport, education, mining, manufacturing. There's a very broad spectrum of the economy. And inner cities provide location, ease of transport, access to services. So we are really inner city champions. We believe in that. Our focus is commercial. We're a company that's here to give returns to our shareholders, but we have a very strong associated focus, and that's impact. We want to make a difference. Mm-hmm. And our impact goes around urban regeneration, investing in areas where perhaps have been redlined in the past, perhaps banks or other traditional financiers are less likely to go. We're very strong in urban land reform. We think changing the complexion of ownership is very, very important, and about access to finance. So we have a complete program of support in addition to our lending, which is done by professional commercial property financing professionals, the tough property program for property entrepreneur program, or what we call the TPPE. We have an Intertugo equity fund, which is there to support up and coming, particularly PDIs in their endeavors. And we're piloting a backyard rental scheme. The metrics, and if I can just finish on that, is that we've lent over 6 billion rand. Our book's running at about 4 billion currently. We financed over 40,000 flats in our time, and 65% of our clients are PDIs, and we help everybody, and we'd like to offer everybody finance, but we have a very strong focus on saying, how can we help up and coming entrepreneurs in that sort of changing the complexion of ownership kind of endeavor. So that's tough in a nutshell. Specialist, focused, and really an inner city champion, I guess.
Absolutely, Paul. Now, as you know, Standard Bank and Nedbank and F&B and ABSA, they all came up with a certain type of relief for their customers, for the landlords, for the consumers. Can you talk about TUHF and your clients? What options do your clients have right now, and what are you doing to help your clients?
Well, one of the things that we're fortunate about is we have relatively few clients. We've got just over 400 clients. So we've contacted every single one of our clients to say a few things. One is, we've got to get through this together. We've got to, like in TUHF's world, you have our clients' tenants who are critical to this equation, our clients themselves, and then our partners in the capital markets from whom we get money from. So what we're putting in place to support is to say, we don't have a blanket payment holiday or anything like that. We want to work with you to say, what is it you need? Because that's exactly what we're offering to our lenders, to say, guys, we might not be able to pay you everything, but we're going to be able to pay you something depending on the collections. I think the other thing we're doing is trying to provide best practice. You know, I'm blown away that often some of our clients have thought up a really innovative thing. And so I'm talking to the Trafalgars, the Mufadis, really keeping close to the property managers to say, what are the stats? What are we expecting in April? How bad is May going to be? Because I think most of us are really worried about May. So what we're doing is we're moving people onto cash payments. We are amending their installments based on their underlying collections. And we're trying to fill the communication vacuum so that we get rid of this fake news stuff. We're making sure that our clients have access to all the latest information, what's happening, and that we're encouraging them to fill that vacuum with their clients. And it could be around the standard social distancing, hygiene stuff, really innovative stuff of how do you keep kids busy in a multi-story block of flats, using your empty flats, using your staircases, what other people are up to, right down to, that sort of ensuring that sort of basic cleanliness is in place.
Absolutely, Paul. And just before I go to Michelle about stats, where do you look for fake news and real news? Where can consumers go? Yes, we have it on a COVID-19 page, but tell me, where else can you go out and find this information?
Well, the one observation is that fake news came out with a bang at the beginning of the shutdown, but it's become much less of an issue, certainly in our world. You know, you've got a letter going around from the Department of Housing on behalf of the Easter Bunny. You know, it's that kind of much more, people are more worried about being a vector for fake news. But we're doing the traditional places. TPN's doing a phenomenally good job. SAPOA, our lawyers, City, industry bodies like JPOMA, like the Johannesburg Inner City Partnership, and a whole lot of other organizations. So we're quite discerning about who we get our information from, that they're reputable bodies. We're very clear about calling people out publicly, if there's fake news and they happen to be that vector. But it's mostly the industry bodies, I guess. And I think we've all got to be particularly diligent in that respect right now.
Absolutely. So now, Michelle, I'm going to come over to you. Just before I do that, remember on Facebook, ladies and gents, please, if you are a victim of COVID-19, you're a landlord, you're struggling, you've got a dispute with your tenants, or if anything's going on, or if you know of someone that is being affected in the property market and they're not sure what to do, let us know now. And remember to tell us, are you a tenant? Are you an investor? You know, which city are you from? Engage with us and let us know so we can help you. We are busy watching and we will be posting some links for you shortly. So Michelle Dickens, welcome.
Hi, Andrew. Hi, Sapin. Hi, Paul.
Good to see you again, Michelle. Back on the show, right? And I love having Michelle Dickens. So Michelle Dickens is from the Tenant Profile Network. Michelle, I'm sure most people know you, but just in case there's someone that doesn't, just a very quick intro. And the first question I'm going to throw at you, Michelle, is I know that you've released some tenant behavior stats for Q1. Can you tell us what those stats are telling us as an industry?
Thanks, Andrew. So TPN is a registered credit bureau specifically looking at tenant behavior information. So we collect data on where tenants rent, how much they rent for, how they pay their rent in that particular month, paid on time, paid late, partially paid, or did not pay. And from that, we create the rental monitor. Now, the rental monitor tells us how many tenants are in good standing on a monthly basis. And we can drill down into provincial or per rental range. But I'm going to speak specifically today about the national numbers, because I think that's what's important. These trends are important right now. So if I take a step back and I say, well, what is a tenant in good standing? A tenant in good standing is a tenant that is paid up by the end of the month. Those are tenants that are paid on the 1st when rent is due, between the grace period, and more severe, paid late, but up until the end of the month. And those numbers, if we take a step back and we look at Q4 of last year, were 81.88%. So 81.88%, 82% of tenants were in good standing with their rent. What does that mean? It means that 18% of tenants were delinquent in that quarter, being partially paid or in the did not pay category. And that was around about 6.92. So let's call it 7% of tenants were in the did not pay category. Now, nothing much changed for the whole of 2019. We kind of sat with 82% of tenants in good standing, flat graph for pretty much the whole year. This is where it gets important. We looked at the Q1 data. It's just ended. Typically, we only look at this data 6 weeks after the end of the quarter. But we can give an early look at it, preliminary data. The data doesn't really shift that much between now and 6 weeks from time, so I'm happy to announce the data. And what we're seeing, and this is not unusual because often we do see holiday hangover in Q1, so we've all been away in December, we come back in Q1, and rental can be difficult to collect in January. So in Q1 of this year, we've seen a deterioration of 3.3% on good standing. What does that mean? It means that tenants in good standing dropped from 82% to 78%. That's quite a big shift. The shift that we normally see in Q1 is not really that bad. So that's a big shift for us. The last time we had shifts like that were in 2016, just off the Nene Gate, and that was also around about 3%, but it bounced straight back up in Q2. Prior to that was in 2009 after the global financial crisis. But again, Q1 took that dip and it popped straight back up in Q2. I'm worried about Q2 in this period though. Given that we don't have, we have a lockdown, we have a national state of disaster going into Q2, Andrew.
And so what do you think then, Michelle? What's your prediction? And you don't have a mirror ball, right? But you're obviously having conversations about what does the rental collection look like in April or May? What is your prediction?
Okay, so we've collected about 3/4 of the data so far. So the data that we've collected at the moment, and literally, Andrew, we're looking at this on a daily basis.
Of course.
So how are we seeing the shift and the change in the data day by day? When we looked at the data 4 days ago, still, so that was on the 6th, still 24% of tenants were in the did not pay category. 60% of tenants had paid on time. We weren't recording anything in the paid late because we weren't at the 7th yet. We had a small percentage of tenants in the grace period, but we had 24% of tenants in the did not pay. Now, this is the challenge for the market. How do we shift, given that in Q4 it was 7% of tenants that did not pay? How do we get the 24% of tenants that are in the did not pay on the 6th of April? We've got 3 weeks. How do we get them into the paid late category? And we're starting to see that shift. So every day we're pulling the data, we're having a look at the fresh data. And I can tell you that as of today, we're down to 19%. And that's the challenge for the market. We still have just over 3 weeks. Every day we need to be focusing, how do we collect from our tenants? And it's not just collecting. In some instances, as Paul has suggested, it's about understanding where the tenant is at. So those tenants who have legitimately lost their earnings, we're not going to get rent out of them. If they have a history of paying their rent and they're in good standing prior to this lockdown, how do we now deal with those tenants in terms of understanding that they've got a history? Let's do some deferment. Let's do some deposit utilization.
Absolutely, Michelle. Now, there's still some people that don't know about your rental recovery pack, where tenants and landlords really need to start speaking. And this is where, in some cases, if there's a genuine situation where landlords like myself, we need to be compassionate and need to understand, we need to communicate with that tenant. Now, there'll be tenants that have already been retrenched. There's tenants that have lost their job. Before I go to Paul, because I'm going to be asking Paul about the capital markets, can you just quickly give us a rundown for the people that haven't heard about your rental recovery pack? What is it, and how should landlords and tenants be utilizing that right now?
So the rental recovery pack was developed to give landlords some alternatives to rent collection. And it's developed specifically for this period of state of disaster, and it's limited to this period. And what that means is you want to use what we've called the tenant's income declaration document. This is where the tenant can say, I'm in this position because I've had a loss of earnings. Due to retrenchment, temporary unpaid leave, I'm a commission earner and I'm not earning commission. I'm an hourly worker. There's no hourly work happening at the moment. So they have to be very clear that it's as a result of loss of earnings. The reason for that loss of earnings, that the landlord can contact the employer and confirm the loss of earnings, and that there is supporting documentation that goes with it. So we've had a lot of our clients saying to us, our tenants want to apply for rent deferment, but when we ask them to prove and substantiate their loss of earnings, all of a sudden they can't, and so the rent is in the bank. So it opens up the door to the conversation to say, this deferment or deposit utilization is as a result of the loss of earnings. Typically, we suggest that this is used for tenants who are in good standing. Again, we had a call from a landlord today to say her tenant hasn't paid for the last 6 months, and now they're using this as a reason why they can't pay. At this point, you're already sitting with a delinquent tenant. Using deposit utilization or deferment is not suggestible for a tenant who's already 6 months in arrears with their rental agreement. So it's about understanding the income. The second agreement then that the landlord or tenant can agree which they want to use. The tenant says, you may use my deposit to cover my rent, and I will then make reinstallments to recover my deposit over a period of time. That way, there's an immediate cash flow solution for the tenant and the landlord. We're getting money into the economy, and the tenant will repay once state of disaster has been lifted. The tenant will then continue to pay the catch-up installments on those deposit utilizations. And then the third one, as Paul suggested, is a deferment. I've got no income right now. I'm in good standing, but during the state of disaster, my rent is deferred. Post state of disaster, I'm going to pay my rent, my current month, plus my months going forward, or my catch-up of my installments of what's been lost.
Absolutely, Michelle. I'm going to come to Paul now. And when I come back to you, Michelle, I want to talk about payment holidays and is it going to affect your credit profile? So we'll come back to that. But just remember, ladies and gents, please send us your question. If you got a question for Paul or Michelle, if you're being affected or know of someone that is being affected, please ask questions. Paul, over to you. You got a comment?
Yeah, I was just going to make three observations. The first is the work that TPN has done has really been important in the market. We've certainly I mean, there's a rigor and there's a process in that. But the second is that it's critical that our clients speak. There's lots of communication with their tenants, you know, in terms of getting the remedy, getting through this together. Our observation currently, because we're watching our clients quite closely as well, is that the payment is quite variable on an area basis, strangely enough. You know, for example, in Joburg, we're finding that the Hillbrow Berea type landlords are faring a little bit better than, say, the more downtown guys, particularly in that sort of Doornfontein, Jeppiestown, those kind of areas. So we're seeing some changes in the collections, and then very much, you know, those kind of numbers, perhaps a little bit better. You know, currently we're seeing people collecting around 85% is where they currently are on our larger clients. Our smaller clients and those more in that sort of peripheral areas can be as low as 50. So we're seeing it quite variable. And that's to do with the process that you've implemented and also the communication with your client. You can't communicate enough.
Absolutely, Paul. And that's what's crucial. Michelle's been saying that, you've been saying that, I've been saying that, everyone else. We have to communicate, A, with our tenants or our landlord or with the banks. Don't wait to miss your bond. Don't wait to have that argument with your landlord. Be proactive about this and not reactive. But Paul, what are you seeing in the capital markets at the moment?
Well, to go to the other side of Tuff's business, I mean, our interaction with the capital markets is primarily through the asset managers. Who are the asset managers? Their clients are the pension funds, the insurance industries, the whole savings industry as a whole. We do have some interaction with the banks and also with the development finance institutions, particularly the National Housing Finance Corporation, Development Bank, those guys who continue to give us really, really good support. So what do we see? A lot of concern. People are worried about the money they've lent on behalf of their clients, the pension funds, et cetera, et cetera. But we're also seeing a lot of empathy. So people are starting to understand where the situation is. They're understanding that these are really difficult times and cash flows can be compromised. But they have a very strong, guys, how do we get through this together? How can we help you? Now, a borrower like us, who borrowing hundreds of millions of rand at a time, have these things called covenants. You shall collect X amount of your installments. You will make sure that your loan to values don't blow out, et cetera, et cetera. And we're seeing that our message to say, listen, we will pay you to the extent that we collect. We're interacting with our clients. We're really encouraging our clients to interact with tenants. And there's a lot of resonance in that. I'll make another observation though, because these guys also lend to the hotel groups and the casinos and other parts of our economy, where we currently seem to be faring a little bit better than some, and perhaps a little bit worse than others. So we're seeing a lot of empathy in the capital markets to say what's real under there and how can we assist you based on the real stats. It's no different to what Michelle has just said between a landlord and tenants. It's exactly the same between a financial services company like ours and the capital markets.
Absolutely, Paul. Thank you for that. A question has just come in, Paul, and I was going to, I'm personally in the residential space, right? And most of these updates and conversations have been around residential with a bit of commercial flavor to it. So there's two things I'm going to ask you, Paul. What's your opinion? What's happening in the commercial market? And Sanjay on Facebook has just asked us a question. He says, I've given tenants a reduced rental option. So he's given them options of reduced rental. Can you give me other smart options to use? What else can I do to help my tenants? And so, Paul, if you just give us your opinion, what's happening now in the commercial landlords versus residential, and then just try to think, and Michelle, you might have a couple of ideas on that as well.
Good. So most of our book is residential, but we have a lot of associated commercial. So we have a single loan with 60 flats and 5 shops downstairs, if you can think about it like that. We do have some commercial only, particularly down Rocky Rally Street, some in Cape Town, some downtown Durban, and a few other places. What we're finding that the going's a lot heavier in the commercial property space, to the extent that I understand it in our area. And that's 3 things, I think. Firstly, there are a lot of small businesses there who are perhaps and in the sort of food trade, restaurant trade, those kind of things, who have been shut down. And those businesses live month to month. And so that's the first lot. Second is you have the bigger chains. Some of them have come out quite aggressively saying force majeure, and I don't have to pay for the period of the lockdown. And then the others who are saying, well, I'm trading, I'm in an essential services business, and I'm able to meet those installments. But the collections that we're seeing in the retail space so far, and it's very, very preliminary from our clients, is around the 30% mark. What to do? Again, it's communication. It's to keep close to the kind of legal advice coming out of SAPOA. Certain of the attorneys, Schindler's, for example, Cliff Decker, they're the people that we use. And there seems to be, it's much better if there's a communication and an application to say, can I defer some of my rent? Would you, in this instance, we don't recommend this for residentials, but in this instance, some sort of rent reduction, and hopefully some of your insurances, and particularly your property insurance, may cover some of this, depending on the clauses in it. Loss of rent is a fairly standard property owner's insurance clause, but often difficult to prove, I guess.
Absolutely, Paul. Paul, there is another question for you, but I want to go to Michelle first to ask about payment holidays. The question for you, Paul, was what is your opinion when we come out of COVID-19, what's your opinion, generally speaking, property prices and rental prices? Do you see a drop in rental prices? So have a think about that. Let me come to Michelle. Michelle, this is a very common question we've been getting all week. As we know, the banks have released payment reliefs for landlords with properties. But what about the general consumer out there? We're getting questions at SAPN about, is this going to affect my credit profile? So if I get payment relief for 3 months, I'm technically not paying it for 3 months. Is that going to affect my credit profile? Can you clear that up for consumers, landlords, and for everyone, please?
Right, thanks, Andrew. So from TPN's perspective, from our bureau perspective, with the data that we collect from our clients being estate agents and landlords, our directive is that the accounting software needs to implement the terms of the agreement that's been reached. So if the deposit utilization has been reached, then the payment needs to come out of the deposit trust accounts and into the rental account. And therefore, the consumer, the tenant, is not in a worse off position in terms of their credit profile. There's no negative or adverse listing on their credit profile as their payment has been brought up to date. In terms of deferments, again, we are suggesting that the rent that has been deferred is journaled out of the month that it is not due in. The income remains, but the requirement to pay comes out. And it's journaled into the month where it becomes due. So if we say we're not going to pay rent for April, but we're going to defer to June and July, half and half, then that needs to reflect in the accounting package. That means that when the data comes into the credit bureau, there's no adverse recording on the tenant, so long as they meet their obligation to pay the current rent plus the deferred portion installment in the future month. The same thing happens in terms of the SACRA data from a consumer perspective, where the data is going into the traditional credit bureaus in terms of how you are paying your traditional credit agreements, your telco agreements, your insurance agreements, etc. So there are 2 types of agreements. The one would be an extension on your term. So if you were paying the account off over 6 months and you're now going to pay it off over 12 months, that gets reflected in your payment profile, and there's no adverse listing on your credit profile as a result of that. And we see the terms grow from 6 months to 12 months. Similarly, in terms of if you have been given a payment holiday, that gets reflected in your credit profile. And again, there's no adverse listing or default listing unless you become delinquent on that deferred payment. So if you then fall behind on that deferred payment, at that point, same as with the rent, at that point, it would then affect your credit profile.
Awesome. Thank you so much, Michelle. Michelle, do you have a comment? I'm going to go to Paul to ask him that question about his opinion on the property market, because everyone's saying property prices are dropping and are going to drop. What about rental prices? Do you have a comment on that or not?
Definitely, Andrew, definitely. I mean, we were already at escalations of 2%, 2.5%. And so I don't see how tenants, when we enter a market where there are going to be people with loss of earnings, shortened working hours, retrenchments, people are going to start to scale down, as we've been seeing, but we're going to see that more aggressively at the moment. So people are going to shop around for properties that are more affordable. I absolutely believe so.
Absolutely. And thank you, Michelle. Coming back to you, Paul from TUHF, what is your opinion on that? What do you foresee in the next few months after COVID-19?
Just to pick up a little bit on what Michelle said, the installment that gets raised or the rent that gets raised is where this whole profile, credit profile turns on. And we've got exactly the same thing. You know, we're working with our clients to raise the installment that can be paid, not necessarily that's due. Listen, the future is about, I think property fundamentals will win the day at the end. My answer is going to be very restricted to inner city areas and the often continuingly and fairly sustainable demand or extremely sustainable demand that's going there. But the equation that property fundamentals rests on is, are your costs growing faster than your income? And Michelle's exactly right. We've had that for the last year and we expect that to intensify. In other words, your rentals are going to be flat, even coming off a little bit, but your costs and particularly your administered prices, which are really the major problem, the prices that the municipality charges for buildings. I mean, in Johannesburg, every flat pays the municipality nearly 1,200 Rand per month in utilities and taxes and refuse and effluent. I mean, if I can just make the point, a downtown flat in Hillbrow pays more for effluent than a flat in the Michelangelo. I mean, that's really how absurd this thing has got. So I think pressure on government to make sure that the cost starts to reflect the increase in rentals. But rental increase has been very flat because of the economy. And I think one of the things that we know is that this pandemic is going to have a severe impact on the economy. Just the degree of severity, I think we're all debating, but it will happen. My view is that people need to be patient, though. You know, this too shall pass. Property fundamentals will kick back. I don't think you should be making major decisions of disposing of assets or even buying of assets. I think you're going to have time for this. I think there will be deals around. I think that particularly those metros like Durban and Cape Town, and in fact all our coastal metros are showing very strong demand and are in a more vibrant space than Johannesburg is, that perhaps has a slight oversupply problem. So I think there's going to be a long period of correction. How long that's going to be, I don't know, but it's certainly not less than 6 months before we start the recovery. I think the recovery is going to be come about. Although Old Mutual has a sort of V-shaped recovery, I know, as opposed to U1 is we're going to go down fast and back up the other side fast. That's particularly their view. I do hope they're right. But I think inner city markets, if you're patient and you're resilient, I think you'll come out the other side just fine. But don't forget to tell your councillor, tell the mayors that administered prices are out of control and they really need to come back to much more inflation-related kind of increases.
Absolutely, Paul. And that's why I invest in property. I always say that property is quite forgiving, even in these times, right? Yes, we'll see a price drop in property, but it's going to be one of those cycles. Yes, it's going to be quite a hectic cycle, I believe. And that's why it's important, Paul. And you mentioned the word fundamentals. It's so important that anybody that wants to start a property portfolio or someone that's got a small property portfolio, that they do understand the fundamentals. And as you probably already know, Paul, that's what we do at the SA Property Investors Network and the Property Academy. It's exactly what we teach, are the fundamentals. So before I ask you, Paul, about one last thing that you want to leave our audience, just a bit of housekeeping. This evening, ladies and gents, at 6 p.m., we do have a webinar with Lawrence Bull, who's talking about the tools to kickstart your property portfolio. He's going to give you ideas as to what should you start thinking about with regards to fundamentals. And then again, on this Saturday, we do have a one-day workshop, which is all about the fundamentals of property, how to run the numbers, what are your exit strategies in these times, what can we do as landlords to help our tenants, and how do we buy rights, how do we get out of sticky situations. So we will post the link on Facebook. If there's anyone out there that feels stuck or they need more education, just click on the link and we'll certainly help you out. That's 6 p.m. this evening and this Saturday. So Paul, thank you very much for your time. That is very insightful. I always ask my guests just to leave, what is one thing you'd like to leave our audience? We are all going into Easter weekend. There's people out there that with fear, there's people out there uncertain. What is one thing you'd like to leave them?
I think it's really that if you've done as much as you can, in other words, you've got your health and hygiene protocols in your building, you've got your communication with your tenants going strong. A famous general once said that now we have to wait and see how the situation unfolds. And so the point I would like to leave people is, don't decide too much right now. There's too much that's uncertain. Property fundamentals will win the day at the end. Be patient, be on top of it as it unfolds, but now's not a good time to be making major decisions, either on the opportunity side or on the trying to batten down your hatches. Take it a week at a time. Towards the end of May, I imagine, middle of May, end of May, we'll have a much better sense of how we're going to get out the other side, how the lockdown's going to be undone. Is it going to be a partial opening up? What does that mean? Is it sector? Is it geographic? Even I heard an age one recently, if you're under 40, go back to work. We don't know what it's going to happen. So be patient, see how the situation unfolds, but just make sure you've done as much as you can for the here and now.
Absolutely. Thank you so much. Ladies and gents, that's Paul Jackson from TUHF, the CEO. Michelle, coming back to you. So before you end off with, what is one thing you'd like to leave all of us going into Easter weekend? Was there anything else that you wanted to share, or do you just want to leave us with one thing?
Andrew, if I can absolutely abuse the privilege that you've given me today, may I please? To any of our clients out there, please send us your data often and regularly so that we can keep the numbers running at a regular speed on the accuracy of that data. So I know some of our clients share data once a week, some share once a month, some share every day. Right now, we are prepared to take data on every single day from every single one of our clients. Let's post it and let's keep those numbers flowing. Right now, we're at 19% did not pay for the industry, and I want to see those numbers coming down, and I want to be able to report back post-Easter weekend that we are substantially down in terms of the did not pays, or substantially up on those that paid. Thanks, Andrew.
Absolutely. Thank you so much, Michelle. So that's what you wanted to say. What's one thing, though, that you'd like to leave them for this weekend? Give me a nice thought.
So, Andrew, you know what? I cannot believe that we're 2 weeks through this. guys, this is 2 weeks post the lockdown. We are 2/3 of the way through, and we're not sure whether it extends or not. And as Paul says, right now is not the time to be worrying about what we don't know. Let's focus on what we do know, and that is that we're 2 weeks into this. We've now got a really nice Easter long weekend, and let's focus on some family time. And let's come back on Tuesday, and that leaves us just 3 or 4 days left, and hopefully we're out of the woods at that point.
Absolutely. Thank you so much, Michelle. Ladies and gents, Michelle Dickens from the Tenant Profile Network. And just remember that we do have Michelle's details and TUHF's details on that COVID-19 page. Quick reminder, go to www.joinsapin.com/COVID-19. We'll put the link on there. We are recording this live, so if you joined us late or in the middle, you can register for free. You can get TUHF's details to find out more about TUHF, more about TPN, and get up to speed with what's happening in South Africa. So ladies and gents, some of the topics for next week, we're busy talking to some of the traditional banks about, are there any further updates from the banks? And something that's coming up quite a lot is student accommodation. How are landlords being affected? So I contacted Dana Bonzai. He was the winner of the Investor of the Year 2019. He's from Bloemfontein and has quite a big portfolio in Bloem. So I've invited him as a guest. We will send you more information over the weekend or early next week. It's either going to be the Tuesday at 1 o'clock or the Thursday at 1 o'clock. So if you know of anyone who's got a student accommodation building, a property, and they want to get some advice from Dana Bonzai, we will be doing that live next week. And a quick reminder, just before we close off, this evening at 6 o'clock, there is a webinar by Lawrence Bull all about the tools to kickstart your property portfolio. It's free. You can ask questions on the webinar. And it normally lasts 1 to 1.5 hours. And for those of you that are interested, that want to get more information around the residential property market, and maybe you feel stuck or you need some help, we do have a one-day workshop this weekend on Saturday from 9 o'clock to 5 o'clock. We will post the links. Otherwise, Michelle, like Michelle said, this is a weekend, especially Sunday, family time, spend time with the family. Take the opportunity, ladies and gents, to maybe stand back and just reflect on your goals, because things are changing. How we do business is changing. It's a good time to actually slow down. I mean, Michelle and Paul, going into this, life was busy. In fact, contradictory, I'm actually finding that even working at home, I've got more work to be done, which doesn't make any sense at all. But I'm also getting good quality time with the family. So we don't know what's going to happen, like Michelle and Paul said. So let's just not panic. Let's relax. Let's embrace the moment and then take advantage when we can. So ladies and gents, that's it from the SA Property Investors Network. God bless. Have a great weekend, and we'll see you next week.